Citibank charges 1 to 3% on most international wires, and they get that from the spread, so the charge is hidden. It's a massive tax on global capitalism paid to quasi-governmental chartered bodies that have explicit, heavily limited oligopolies in every country on earth. And they take such a massive amount of fees, of taxes, from their control over this system that it's comparable only to things like federal income taxes or death taxes or capital gains taxes. Bitcoin is the first plausible alternative to that did not involve smuggling cash on planes.
Hello, welcome to episode 54 of the Bitcoin Game. I'm Rob Mitchell. Back in 2015, I had been waiting for a Bitcoin conference to be held here in Los Angeles. I finally gave up and booked a trip to the 2015 Texas Bitcoin conference. As luck would have it, shortly after making arrangements to travel to Austin, LA's first Bitcoin conference, the State of Digital Money, was announced. 2018 marks the third year now I've participated in this LA conference, this time moderating a diverse panel of guests speaking on the broad topic of the state of cryptocurrency. Here's lightly edited audio from that panel.
All right, so the next panel is the current state of cryptocurrency, the one you've all been waiting for. So if we could have moderator Rob Mitchell, he's a podcast host, The Bitcoin Game. We have panelist Daniel Aranda, Managing Director of Business Development at Ripple. Ryan Singer, co-founder and CEO of Chia Network. John Mercurio, Deputy Global Chief Communications Officer, Bitfury Group. And Joe, CEO of BitBull Capital.
All right, thank you so much. So we got a pretty diverse panel. Danny, let's start with you. Tell us a little bit about yourself and the company you're representing.
My name is Danny Aranda. I'm on the business development team at Ripple, focused on partnerships. Ripple is a company that really values having a very narrow and deep focus on one use case, one problem, one customer. And so where we're focusing our efforts is really on cross-border payments. We have a lot of conviction that payments is a core utility for cryptocurrencies, for digital assets. And that really the highest pain point within the payments market is cross-border international payments. And I think we also have a lot of conviction that payments really matters. It really matters to financial services. Most financial products get rendered through a payment. So if I give you a loan, you don't have the loan until payment goes from my account to your account. And it also matters just for internet services in general. So one of Uber's largest engineering teams focuses all on payments. So we think that there's a really substantial opportunity there, and our whole kind of play in this space is to really focus on it in a very narrow way and make sure we get traction around it.
Interesting. So I'm going to kind of ask my Ripple noob questions. Obviously, I've been aware of Ripple. I've never really dove really deep into it. But how would banks use something like Ripple when they're sending money back and forth when it's not pegged to a currency? Like, is that not a problem?
What we provide to banks is an enterprise solution. Looks like an API-based product. They plug that into their back end. There are a few things that they're doing with that solution. They're doing some messaging with each other. They're also managing liquidity, and they're also settling, actually kind of adjusting their own ledger systems. A lot of the protocols that are being used for that, one of the core ones is Interledger, which provides for synchronization across multiple different ledger systems, whether they're blockchain-based or even if they're traditional ledger systems like a bank's core ledger. So bringing folks onto that network is a core use case that we're going after, and we think that'll be kind of a good wedge, a good insertion point for having crypto become part of what a bank's flow becomes about in the long term.
Okay, so this kind of is separate from the XRP then?
Yeah, correct. One way to think about it is Interledger is almost like a layer 2 solution. It's an interoperability protocol. You can think of it architecturally similar to something like Lightning. So if you're doing kind of micropayments over one of those layer 2 solutions, and then you can settle for the liquidity using an underlying blockchain like the XRP ledger.
Okay. Great. Ryan, do you want to talk about yourself and your project a little?
Yeah, so I'm the co-founder of Chia Network. My other founder is Bram Cohen, the guy who invented BitTorrent. We're just trying to build a better Bitcoin. It's a super ambitious goal, but it's also pretty simple, a lot simpler than most of the other projects on the speaking circuit. We're not trying to really do advanced smart contracts like CryptoKitties or anything like that. We're really just trying to disrupt the $36 trillion in narrow money internationally.
And you were also a co-founder of TradeHill, a pretty well-known older cryptocurrency exchange. So it seems like you've got a lot of time and experience in the space.
Yeah, I'm pretty experienced with exchanging cryptocurrencies. I sold Fortress and Pantera, their first cryptocurrency. I sold Coinbase, almost all the cryptocurrency they bought in 2013. If you got Bitcoin from Coinbase in 2013, they got it from me. I bought almost all of BitPay's cryptocurrency in 2013. So if you used Bitcoin at any merchant in 2013, you were probably selling Bitcoin to me. And I spent a lot of time struggling with and studying and deeply understanding how American banks and broker-dealers process wires and how they process securities exchanges. And I kind of understand Bitcoin's competitors pretty deeply on the fiat side.
Okay, real interesting. John from Bitfury, what do you have to say?
Hey, everybody. Thank you for inviting me here. I'm the Chief Communications Officer at the Bitfury Group. I don't know how familiar you are with us. We have been around since 2011. We started out primarily as a Bitcoin miner, securing the Bitcoin blockchain. My CEO, Valery Vavilov, was sort of one of the early adopters to Bitcoin. But we've transitioned or evolved, I guess is a better word, over the past couple of years into more of a sort of what we like to call a full-service blockchain technology company. We've invested a lot over the past couple of years in blockchain applications. We have expanded our sort of footprint, our data center footprint. We used to be based primarily in the Republic of Georgia, but we've opened data centers, built data centers, and are now operating them in several countries around the world, including Norway, which I just got back from, where we launched our 40 megawatt data center, I think 3 of them. And we're focused, we're diversifying, as I said. We are developing still hardware, so we develop what we call a block box, which is a sort of a mobile mining center. But in addition to that, we're developing software solutions. We developed last year and rolled out an open sourced a product called Exonum, which is sort of what we like to call the next step to the blockchain. It allows you to sort of customize and build your own blockchain applications. And we are also partnering with governments, with businesses, with institutions around the world, trying to develop blockchain applications outside of crypto. Not that we aren't, still very focused on developing the Bitcoin blockchain and mining, but we recognize that there are so many, there's sort of like an infinite number of solutions or blockchain applications in the world outside of finance. We partnered recently, or last year, I guess, with the Republic of Georgia, which is one, again, we have a very good relationship in Georgia, to develop a land titling program that is anchored to the Exonum blockchain, and is really transforming the way that people in the Republic of Georgia develop or secure their land titles, which in the United States is not really a big deal because we have a relatively secure government system for land titling, but around the world it's one of the bigger areas of corruption, manipulation, and financial insecurity. So for us, it's something we're very proud of.
So this basically is using Bitcoin blockchain to kind of timestamp and secure anchors with information and all that kind of stuff.
Exactly. I mean, again, it's funny being an American, there's so many systems. I mean, as much as we like to complain about our government, we also enjoy a relatively high level of security when it comes to government services. But when you leave this country, you realize that there are so many systems in governments, whether it's because the government is unstable or because it's corrupt or because it's just inefficient or incompetent, that it's just not serving its citizens in the way that it needs to be doing it. And so what Valery, my CEO, my boss, recognized, I think, a long time ago, along with a few other smart people, is that there are a lot of solutions, a lot of ways that the blockchain technology can be used to build solutions for people across the scheme, sort of across the spectrum.
Thank you. And Joe from BitBull Capital.
Hey everyone, thanks Rob. So my name is Joe DiPasquale. I'm CEO of BitBull Capital. John was talking a little bit about the securitization that we have in the U.S. So due to the Securities and Exchange Committee, I can't talk a lot about what BitBull does, but I can talk about what we see in the industry and investing trends that I personally have seen. Just, I guess, as some background, I think we're probably, I don't know, in the audience, some of you may be kind of on the technology side and some of you may be on the investing side. Who's here to maybe learn about the technology and who's here to learn about investing? So
Yeah,
if
so
you're tech, let's see.
Investing? How
Yes.
about investing? Who's here for investing? Technology?
Interesting.
Someone want to yell out another reason who didn't yell out their, raise their hands? I see some
Here
people.
for the Mexican food.
Food.
Oh my God, was that food good, by the way. Thank you to the people who arranged that.
So on the investing side, I think we see a number of different strategies. We see people who are, definitely looking at the earliest stage. So let's go from like longer term investing, like pre-ICO, to then maybe buying tokens when they're already on exchanges and making longer term protocol decisions. We see investing companies that do shorter term decisions based on news, what's going on with, NEO's having a conference this month. Or we see even shorter term things. We see places making multiple trades per hour, quantitative trading, less risky, even market neutral, not caring what's going on and what the fundamental value is. We even see investing companies that do things like arbitrage, just exploiting inefficiencies in the market. So there are interesting trends, I think, in the investing side as well, which is not the technology side. Sometimes it's technology agnostic and doesn't actually care about the fundamental value. But that's kind of the perspective that I have had. I've been in the industry since 2013 investing. Yeah, I think that's a background.
I guess due to regulations, I'm going to have to ask you, you didn't say it, but on your website, I saw you manage a fund of crypto hedge funds. Okay, are you allowed to say if that's correct?
That's definitely not on the website. If you go to,
not on the
it's definitely
website.
not on the website.
I saw it somewhere. Sorry.
Well, I think we've all seen one interesting. I know the regulation panel already happened, but it's interesting. There's a lot of heightened scrutiny among crypto assets. I mean, we saw definitely crackdown on ICOs. Telegram not doing a public sale for its ICO. We've seen a trend with ICOs of taking down their public sales actually. And so we see the same thing, I think, in the investing space. There are definitely more retail ways to invest, such as buying something on an exchange, buying Bitcoin, or even index funds, which do a monthly rebalancing. But the SEC for actively managed offers restricts it to just accredited investors, and then those offers are also restricted about talking.
Or you could do Reg A, like we're doing.
Regulation A. Whenever someone says reggae, I'm like, music? No, regulate. I know that's what you people call reggae. But and Joe, real quick, you were saying there was over 300 crypto hedge funds?
There's been an explosion in crypto hedge funds, but you guys have perhaps read about that. So there's definitely a lot of different strategies emerging, even more than the ones I just talked about, and definitely funds focused on different regions and geographies, from Asia to the US to Europe and more, or different themes within the space, whether it's looking at a specific industry that's being disrupted or more. So certainly a lot of people having different ideas of how best to invest. And historically with investing, right, if you look at the equity space, people often will just invest in, let's say, an index or an exchange traded fund, something that's just a basket of the top, and those have always done better than active management in equities. But if you look at reports from Eureka Hedge and others in crypto assets, active management, where you're not just like monthly reweighting things based on market cap, does better because of many inefficiencies in the market currently. Of the $400 billion market cap or so, it's estimated about 95% of that is retail investors. So there's a small fraction that's maybe an investment company, an actively managed investment.
95% of cryptocurrency holdings are with retail investors, is that what you said?
Retail. That's
Retail.
That's a stat that I've heard.
Wow, where's that data come from?
I do not remember where I've read that. Yeah.
Do you question
Different,
that?
but I would love to hear different.
Oh no, I don't think exchanges share kind of customer demographic breakdowns by volume. And I wouldn't know because my exchange was only institutional. So I didn't have any retail traders on my exchange.
Interesting. Okay. Do you believe it's different? And if so, what would you believe it is?
Well, so crypto trades so much more than anything else, right? Like if you look at Bitcoin's trading volume, I think we traded like $8 billion today. And today's a Saturday where wires don't post. So we're going to trade more than that on Monday. And so I think we have to differentiate between actively traded crypto that's kind of turning over on the exchanges, like people who are doing ARB or the people who are doing market making, and passively held crypto, where people are either just keeping it in their exchange account long term, or they removed it to a wallet and it's not in the exchange ecosystem at all anymore. I think that it's a pretty easy bet that most of the passive crypto, most of the crypto that's been removed from the exchange ecosystem is retail, because we know for a fact that institutions are incompetent. Not at anything in particular, just incompetent with the little period after that. But I imagine that most actively traded, when we're looking at the market making and the ARB, which is probably 2/3 of trades matched, because it's half of trades matched by definition, because somebody's crossing the spread to the market maker, and then also some of the people crossing the spread are ARBing. So, and I'd say most of that is institutional, right? That's where a lot of these crypto hedge funds make most of their money, is they have the ability to remove money from a country that has capital controls in fiat, and they use that to profit from the ARB kind of structurally. So I'd say from a holdings perspective, I'm not sure 95% is right, but it's probably high. But from a trade volume perspective, there's no way it's over half.
So, obviously, these are very early days with cryptocurrency and crypto tokens, assets, whatever you want to call them. So utility, I guess we could define it different ways, payments or, digital gold. Or I'd like to, start with you, Danny, and talk about your thoughts about speculation versus utility. And you can apply that to Ripple or the market or whatever interests you.
Yeah, I think speculation isn't necessarily a bad thing. So I think just to the conversation here, we're talking a little bit about volumes that are trading in and out of these different digital assets, and I think that does provide a good foundation. Like the volatility around these assets, some of the price movements have brought a lot of people into this market who have become interested in it. People have left their jobs on Wall Street to pursue different use cases around it. So I think you are seeing kind of a lot of talent come to the table because of that, and I think that creates like a really good setting to start thinking about next order use cases. But I think the long pole for the whole space is going to be about what utility does this drive to the world? Like what real values does this deliver to an end customer, an end user? What problem does it solve? And I think like anything, with starting any new business, with starting any new ecosystem, you really have to pay attention to timing, sequencing, kind of what are your limits, what are your guardrails that you can operate in now and actually achieve right now versus what you're going to be able to do in 10 years. So I think there is a lot of mistakes in the blockchain space where people think about what is going to be possible 30 years from now without really a lot of regard for the infrastructure and the stage that we're in. I hope everyone's okay back there. Without a lot of regard for what's possible now. And I think Ripple's point of view on this is like payments is probably the first thing to make sense at a really mass scale first. And there's a lot of different ways that payments can play out. You can talk about micropayments. You can talk about payments for specific use cases to do certain things. And our take was, okay, well, if the largest pain point in the market right now, so the market outside of crypto, just kind of the normal everyday market, is around cross-border payments, let's focus on that. And then it was just about building a solution that would be kind of 10x better than anything else out there. And we mainly focus on 3 kinds of propositions for the customer: the speed, the transparency, so you can actually like see what's actually happening and give the customer some assurance about how the transaction is going to proceed, as well as the cost. And I think a lot of this is about just seeing around corners a little bit. Like the financial infrastructure that we have today, many parts of it were built to address use cases and needs that emerged, say, 30 or 40 years ago. So a lot of the payment systems built on things like Swift were about addressing the needs of like Shell in the 1970s, where they needed to rubber stamp a file at the end of the day and move $10 million around the world. Now you have a company like Uber who needs to move $2 from a bank account in San Francisco to the mobile phone account of a driver in India, and there's no real infrastructure to do that. Uber goes and builds it themselves in order to do that in an effective way. And so I think as the expectations of the market evolve, that's really what's going to drive, I think, the use of these new technologies. It's not really technology driven, that's the supply side, but the demand side really matters here. And I think a lot of the demands actually in the market for financial services or anything else are largely just being informed by the internet. So if I send you a text, I expect you to receive it immediately, or an email, like you receive it immediately. But if I send you a payment and it takes 3 days to settle, that to me is crazy, given that I live in a world where my expectations are set by services like WhatsApp or my phone and other things. So we really think the internet is kind of leading what people need, and that's why we think we need an internet-based architecture for these new kinds of financial services as well.
I have to just jump in because I think that Danny just made a really important sort of overall point, which is that, just to take a step back into my background, I don't come from technology, I don't come from tech at all. I was a journalist and I worked in communications and strategic communications for a long time. And I was brought to Bitfury specifically because I didn't have a tech background by the CEO, because I think that they recognize, and we all have to recognize, that the future of blockchain technology, the future of cryptocurrency, is bleak and dark unless we are able to talk to people outside of this room, talk to the rest of the world, talk to our parents, our friends who scratch their heads or roll their eyes or sort of don't want to talk about blockchain because they just don't understand it. We're still a very small fraction of the world that really understands the vast potential of this technology, and we will remain sort of a minority until we're able to talk about it in a way that everybody understands. And doing that requires us to do some really hard thinking about what those solutions are, what those applications are outside of finance. Because again, I think that we've recognized financial services as a really important use case, but I also think that it's just like the internet. If the internet was still just 20 people talking to each other back in 1989, it wouldn't have revolutionized the world. And it's the same with blockchain. Unless there's universal adoption or near universal adoption, it'll fail, and it'll just be a bunch of people sitting in a room talking to each other. So that's what I do every day, is try to figure out ways to talk to people sort of outside of this room. As much as I love talking to all of you, I think that it's the audiences, the real target audiences are elsewhere.
But on finance, currency does have universal adoption.
Sorry, say that again?
Currency does have universal adoption. And so it's interesting. Yeah. There was a lot that you said that was really interesting, but kind of pick on, I think, the most compelling part. You talked about the $10 million wire versus the $3 Uber payment. So this is something that I know you know because Ripple spends a lot of time on it, but I don't think most people know. There is no such thing from a payments perspective as an international wire. So how many of you have sent an international wire before? Okay, so there's a good number of people here. What you sent was a message that got relayed through several banks through the SWIFT network that in no way was used to transfer money. How the money was transferred instead is your bank found somebody who had a bank in your country who also had a bank in the receiving country, and it borrowed money from them in the receiving country, and then it paid back the loan in the sending country. There only currently one method to transfer money between the American banking system and the European Central Bank, which is the banking system that we do the most transfer with. That's not like negotiated. The banking system we do the most like private party transfer with. And that method is you put cash or cash-like assets like gold on a boat or an airplane, and you send those assets through the air or the sea to get to the other side of the Atlantic.
Probably faster to do it that way than sending the wire too.
Well, yes. My point is that domestic wires are the only wires that include a settlement mechanism. International wires don't include a settlement mechanism at all.
Because they're all settling through the central bank at the end of the day. So basically, an international transfer is a movement from a local bank to a correspondent bank like HSBC in the US over the Federal Reserve. And no money actually moved. You just had a credit and debit at the Fed. And then HSBC in the UK does a debit to their account at the Bank of England to credit, say, Barclays to move money from the local US bank to Barclays.
So yes, that's how it ledgers. But if you were to think about the actual movement of the value, there was a real cash-like transaction here, and there was a real cash-like transaction there. And it was backed by some lending arrangement for which the lender was paid either a spread or interest. So to me, what's really fascinating about this technology I think will change the lives of every human on Earth, even if blockchain is never used for anything but finance, is the $10 million wire can actually just get posted to the Bitcoin blockchain, and that's a real settlement, and you don't have to borrow money from Citibank to do that. So Citibank charges 1 to 3% on most international wires, and they get that from the spread, so the charge is hidden. But it's a massive tax on global capitalism paid to quasi-governmental chartered bodies that have explicit, heavily limited oligopolies in every country on Earth. You can't just start a bank anywhere. Nobody can. And they take such a massive amount of fees, of taxes, from their control over this system that it's comparable only to things like federal income taxes or death taxes or capital gains taxes. And Bitcoin is the first plausible alternative to that did not involve smuggling cash on planes.
It was the first time that you had true digital money. But before something like Bitcoin, all you had was debt issuances. So if you have money at Bank of America, you think you hold dollars, you have a debit card, you have a credit card, you think you hold dollars in that account, but actually what you hold is a liability issued by Bank of America for dollars. And it actually shows up in their bank account, like in their balance sheet as a liability. So actually having this native asset for the first time that is digital, that is global, that is decentralized to help bridge a lot of these different systems together is going to provide for better communication, but also settlement mechanism for disparate systems all over the world. How is PayPal going to talk to Alibaba, going to talk to Paytm, talk to all of these kind of different services to really connect them together?
So the last on that, central banking, like the currency, if you look at the global stock of narrow money, this is just cash plus coins plus plus central bank deposits. This is the stuff that's not liabilities, but it's just money. It's about $36 trillion globally. And there's currently none of those that from a straight up functionality perspective are better than Bitcoin. So I think that there might be other kind of non-financial promises from the blockchain. I really like the idea, for example, of anchoring Git repos in the blockchain to be able to prove audit trails for a particular set of accounts or audit or supply chain or something like that. But if all we do is have a better money that's more useful in private interactions, especially globally, that's only a $36 trillion opportunity, which is only about 1/3 of all human wealth.
Joe, did you want
Yeah, I was just going to say, I mean, I loved your point also about the taxi cab, like the $3 taxi cab versus these large transfers, because we have seen, people take pot shots at crypto all the time for not rivaling Visa's transaction speed at 30,000 a minute or second, 30,000 a second right now. But we are already seeing, 2 weeks ago, there was a $99 million transaction on Litecoin that took 25 minutes to send and cost 40 cents. So that's obviously like a groundbreaking thing that, you know, the transfer of wealth at the world at a cost that the world has never seen before. And you hear a lot that, you know, I guess for me, I'm confident that the technology industry will be able to rival or even exceed this 30,000 transactions per second. I could imagine different crypto assets building up to 100,000 transactions per second or beyond. And when people expect, you know, this very retail use case of, you know, CryptoKitties being the best game ever, it's just not where we are in the industry right now. Right now, we're still building the platforms. We're still building, you know, people say, oh, is it 97 or 99 in the industry? But it's actually more like 87, I would say, or 92. Like it's about like what's Cisco, not what's Facebook. It's like what's, you know, there's EOS, there's Ethereum, there's Ripple, there's many other just different technologies that are being built, and that's really where we are with the industry. And so, and also just this, I mean, last year was the first time that, you know, billions of dollars was given in pre-ICO money. So it really was, I felt like the industry just received its Series A investment last year. So you have to expect that there's going to be some development time before these products are actually, you know, as you said, communicated to everyone, even non-technical people. It's just in its development right now.
You're a Bitcoiner, but you have the iconic Bitcoin Keychain? Support this podcast and own the Bitcoin Keychain you've probably seen hundreds of times on sites like CoinDesk, Bitcoin Magazine, Ars Technica, Vice, Popular Mechanics, Engadget, and many, many more. Just go to btckeychain.com. That's btckeychain.com.
What do you guys see right now, either with your own projects or with the overall space? What are the biggest obstacles in the next year, few years?
It's still education. I hate to be a one-note, Johnny, but it really is education, and it's getting people to really understand the potential and to understand the vast but the vast potential, I guess, for what we can do. And that, again, is why I think, you know, we need to be figuring out how to have these conversations with vastly different groups of people. So for us, it's, you know, my CEO gets this question all the time. He always says the same thing, which is that it's about, we all recognize, anybody who's smart about this technology recognizes its power. It's convincing the people outside of, you know, our target audience, you know, that are our little clubs, that they need to be focused and thinking about different ways that it matters to them.
I disagree with that a little bit. I don't think there's any shortage of people saying that blockchain and Bitcoin is going to solve cancer, right? Like I think there's that happening all the time, and I think people are beating a drum about the potential of these things. I think
the drug companies think it will.
Yeah, I think again the long pole is really execution. Like, how are we actually going to deliver real solutions that are actually useful? We've been talking a lot about payments, talked about CryptoKitties. Like, there are others, there will be others that we don't even fathom right now. But it's about what you can execute on right now. And you know, our big hope is that, you know, it's good for us as a company, as, you know, rising tide lifts all ships. Is like more people are focused on non-speculative, real utility use cases that can help kind of prop up the industry and bring more credible people to the table and more talent to the table as well.
So I like what you're saying about a major challenge that we have is we have to kind of reach outside of the people in our club, right? The people working on our thing. But I think he's right that we have to build a lot of the tech first. We haven't really filled it out yet. So for me, over the next year, I think one of the big challenges that I'm focused on that I'd like those of you who are already, you know, part of our thing to work on, and I'm looking at the merchant processors. I've seen some in this room. I'm looking at the wallets. I'm looking at the exchanges. Is for God's sake, implement Lightning. Like, what the hell are you waiting for?
Anybody else on this topic?
Yeah, I mean, maybe this has been said, but I'll just say it again. You know, I think it's education. I also think it's we have to fight the hype. We have sky-high expectations. I think some people, not me, but a lot of people sort of have mismessaged, if that's a word, have been messaging this wrong, which is to say that it is a silver bullet, that it will cure cancer. I mean, I'm joking, but we've seen a couple of years of really soaring expectations, and that blockchain will never meet. So sort of, I think educating people accurately, correctly, and realistically about what we can do and what we can't do is going to serve us really well in the long term.
Just a tangent I'm thinking of is like, in terms of the companies getting the money to actually fund their projects, we did see a lot of companies raising an ICO in late last year, and then that, perhaps even in January, and then actually keeping that money in their treasury, not doing any treasury management, and now having less money to work with than they thought they would for their development. On the other hand, I think that in general, we're seeing projects that may be getting more capital than they need at this point. So, like, for example, Telegram raised $1.7 billion recently. So I think there is going to need to be quick development to get to the point of proving what is the value then of this token that actually doesn't, in that case, doesn't exist and hasn't, I don't think, started development. So yeah, I think it will be important to get to quick development to show that there is value, because I would, the markets generally, the macroeconomic environment is really strong right now, and we're very fortunate to benefit from that.
Great. So I can't help but want to get into this a little bit. I don't know if it's exactly on topic, but based on our guests, one of the biggest sources of cognitive dissonance for me is trying to be a conservationist. I've got solar panels and everything, and a Bitcoiner, and we obviously know it's a lot of energy used for Bitcoin. I'm sure John would know quite a bit of energy is used. So obviously there's the proof of work, there's proof of stake, and Ryan, you're working on a totally different type of proof of space and work. Do you guys want to talk about the sustainability of proof of work?
Yeah, I mean, just very briefly, it's one of the bigger challenges we have. I mean, we go through periods, I think, in the media life cycle where the focus becomes, the real story becomes energy consumption. And there's a lot of groups out there that are very antagonistic to Bitcoin and crypto because of the energy consumption. I know a lot of those people very well. So it's an important, and it's real. There's a lot of really good arguments to be had, but it is a real concern. So one thing that we do, and I'm not trying to say, oh, we're so green, but we are focused on sustainable, renewable sources of energy. And Bitfury invested about 4 years ago in a company called Allied Control, which developed a proprietary technology called immersion cooling, which has proven to be enormously effective and successful at reducing the rates of energy consumption dramatically by like 97%. And it's a very simple but also very complicated process that I don't even fully understand myself, but it essentially is a system that processes Bitcoin through using a cooling agent that brings down the temperature. So for us, that's helped enormously, not in all of our data centers, but in most of them, in bringing down our costs and consumption.
Really quick, just for the people in the audience, Bitcoin mining is a really, really technical topic, so I don't expect a lot of you to really understand exactly how it works, but it's basically a competitive lottery game where every player builds or buys a machine that converts electricity into lottery tickets. And every so often there's a winner, and the difficulty globally is adjusted every so often so that the winners come in at about 1 every 10 minutes. That is what Bitcoin mining is, and it is the method through which Bitcoin settles transactions. So it's the entire settlement layer of Bitcoin. It's not the only thing Bitcoin does, but it's the only way you can say a Bitcoin transaction is over. As a result, when you hear mining guys on stage like him, when they talk about their new deployment, they talk about it in terms of the number of megawatts, because it's literally the only input. That's how it works, is you convert electricity into lottery tickets, and it's perfectly competitive. Each lottery ticket is equal chance of winning, and so the question really is how much electricity you throw into it. This is obviously not ideal. So way back, before the Bitcoin industry grew up, we were speculating about who would be the big miners someday. And we thought that the big miners would be people with data center access near nuclear power plants or hydroelectric dams, people with the most bulk access to cheap electricity. And we were naive and we were wrong. Really, the people with the most bulk access to electricity are the people who can still draw power through a meter that's broken and not metering without any concern that the electric company is going to want to turn their meter back on. And that only happens in developing countries in regions with relatively weak rule of law. This is why every mining company worth a damn comes from either China, Northern Africa, or Eastern Europe, including Bitfury. Not saying that that's how Bitfury's operations happen anymore.
Not how we operate.
But that is the origins of most of the big players in Bitcoin mining. This is made worse by Bitcoin mining pools.
I would say mostly in China. I mean,
Also, Kazakhstan's an excellent example. There's a town in Kazakhstan that's got a coal-operated power plant that used to only be operated in the winter when they needed it to stay warm, but now is operated 24/7, 365 because there's a big Bitcoin miner attached to it. And the people in that town are now breathing that coal. This is made worse by Bitcoin mining pools, which is another unanticipated development of the Bitcoin protocol that we wouldn't have been able to predict in like 2009. Bitcoin mining pools allow large miners to buy out small miners. So the small miner wants payment regularity because their electric bill is due every month, but they don't win a block every month. They win blocks every year or every decade. And so what they want is they contribute their proportional hash power, the proportional megawatts, or in this case, kilowatts, to the pool, and they get instead their proportional payout. But the large miner in the pool that operates the pool is the one that gets to make the decisions about which transactions are settled in the next block. And in extreme cases, like we saw with the fight over SegWit and S2X and Bitcoin Cash, Bcash, we saw the miners sometimes will make political decisions with their hash rate. They'll threaten a hard fork, or they may even do a hard fork, and so that leads you to think, okay, so how centralized is the hash rate? And luckily, there are good charts. You can go to blockchain.info and look and see. And what you see is basically the 3 largest pools control over 50% of the hash rate between them, and the 12 largest pools control over 99% of the hash rate between them. And that means that on a settlement basis, Bitcoin is more centralized than the US banking system. It's not on a transaction processing or full node or PKI basis. Bitcoin is a very decentralized protocol. But on a settlement basis, it is more centralized than the US or European banking systems. And that's unfortunate. Our big technical goal at Chia, and I promise I don't want to pitch very much, our big technical goal at Chia is to solve that particular problem of how do you do an open access blockchain that doesn't have staking, that doesn't have access control lists, that doesn't have validator lists, that truly is a global open access decentralized network without having the centralized settlement layer reliant on power plants. And the answer that Bram has come up with that we are excited about, that we're proving out in peer-reviewed academic papers and this code that we're hoping to launch next year, is basically, instead of doing this lottery game, you do a bingo game, where you fill up if you're running a full node because you're staking Lightning channels or you need a trustworthy API or you do payments verification, you just fill up all of your free disk space with the same kind of random proofs that you generate while you're Bitcoin mining. But because they're bingo cards instead of lottery cards, it's not that they're winners and losers, right? The lottery tickets you print Bitcoin, if it's not a winner, it's a loser and you discard it. In Chia, every bingo card is going to be useful for as long as you're going to be playing the game. And so a block comes out, you check your closest bingo card to that, and that's what you use to calculate the difficulty for the proof of time. So block times will get back to an average amount like Bitcoin does, but my block time is not the same as your block time. If I'm closer to the next block, I have fewer minutes of proof of time to get there. So what we end up with is a network that we hope will be more decentralized than Bitcoin and more distributed than Bitcoin, and thus more secure than Bitcoin. We'll see. Proof of work is a really well-tested technology, and ours is very new and untested. So we might not get there, but the goal, absolutely, 100%, the goal of our project is to create something that's as wondrous as Bitcoin, where you don't have mining pools at all, and where you don't have anywhere near as much consolidation in terms of existence of big miners.
All right. So I've got more questions, but I also know we might have some audience questions. Is there anything else that you guys really wanted to say on the topic before we get to audience questions? No? Okay. Do you guys have any questions for the panel?
Running down. So one of the biggest criticism of the crypto market right now is that we are overvalued, right? We reached $800 billion valuation. Who knows if that's real? So what do you guys think of projects raising, for instance, Ton raised 1.7 billion, Hashgraph is raising 200 million for 5%, Definity is raising 3.5 billion in total, and another project's raising 150 billion to kind of supplement Bitcoin's technology. What do you think that is necessary for the space, or do you think that is bad for the space?
You're just talking about my personal investing. Like, I know I've stayed out of all of those deals because I do feel like they're not only too rich, but also too risky. They also lock you up for a while until the point where you don't know what's going to be going on in the market. In the case of Ton, you're locked up for at least basically a year. To me, right now we're in, again, like the macroeconomic times we're in right now, people also think that like equities generally are overvalued. You may have saw on Friday, the unemployment in the US is under 3% for the first time since like maybe under 4%, that's right, for the first time in I think it's 2000 or something like that. So generally, if you're going to invest in something, at least I would recommend not being locked up for a while. So to me, I personally, as Joe, would not invest in any of those that you mentioned.
I would double down on that. There's a global asset glut and an incredible search for yield. Right? There's so much money and so few places to invest it safely that what you're seeing is not just in crypto. Venture capital is going crazy and they're all hurting to the hot deals. And private equity has way too much money in their hands, and we're building up and up and up in every city with reasonable real estate laws. So where we're at right now, I really do think, is humanity has this problem where we don't know what infrastructure is going to make our lives better, and it's a coordination problem, and we are solving it badly. And so any investment at all that can be easily accessed by people who are desperate to get their money out of local markets into global markets is just massively overvalued because it's being bid up by incredible amounts of money that's otherwise stuck behind capital controls. And I think that right now that's mostly crypto projects, but as you see more like crypto securities or more securities tokens, I think you're going to start seeing that cross over into other spaces. As soon as you can buy exposure to Toronto real estate using Bitcoin, Toronto's going to double again, right? As soon as you can buy Apple stock using Bitcoin, Apple's going to go way up. There's just this incredible amount of wealth being created by a new middle class in China and a new middle class in India, and all of these people who are coming from generations of poverty who are suddenly becoming wealthy enough that they have positive net worths and need to think about asset allocation. And there aren't enough opportunities available to them to satisfy them. And it puts us in a really awkward position and a really risky one where those of us that are lucky enough to have our choice of deals don't have any good answers about where to put our money.
I think the only way to address it, like long term, is build. Like just keep building, executing, like having real projects deliver real value, and like as a company, Ripple, like we don't look at the price day to day. I would go insane if I did that. It's really just about, okay, like what is our mission? What are we trying to solve for? Who is our customer? What is their problem? And like keep executing against that, and things will kind of eventually go to a good place. I agree though, like that there are all these macro factors that are kind of exogenous to, say, technology or crypto itself, and are introducing these interesting paradigms where you have these situations where a project that isn't live yet, hasn't coded anything, and they're raising billions of dollars. That is very interesting, but I think it's also it only, I think, heightens the need to deliver, and I think that's where most projects should be focusing versus optimizing on the amount of capital they can get, since capital is so easy now.
All right, does anyone else have any questions? Great, then I can ask another question. I don't know if each of you want to kind of give your opinion on, say, where this space, as far as, I don't know if it's the speculative part of the space, the prices, or the actual technology delivering will be in, say, 3 and or 10 years. Anyone want to take a stab at where they see this going?
I mean, the most often used analogy is just the internet that we have today for data and information. I think kind of a cool story is Instagram. You had the project started with 2 people. When they actually launched and became kind of a hit application, it was still 2 people, and what they were able to do was leverage a lot of open source and just available frameworks online, different kinds of infrastructure that are actually really cheap, like S3 and different resources through AWS, and launch a project that could overtake probably one of the largest markets online, which is photo sharing. I think within the blockchain world, we're really far from that situation happening, where you can have a really efficient capital event to young people with about $50,000 between them can go overtake a really, really large market. That's really different than Telegram raising $1.7 million or $1.7 billion to overtake a lot of different markets at once, but no timeline or anything like that. So I think where we end up in 10 years is that you have a really amazing infrastructure with different layered components around business logic, payments, the actual storage, kind of all the kind of different projects that we're seeing today, where a really small development team can come together, execute really well on a solution, have a good go-to-market, and in a really capital-efficient way, change the world.
I think that tech is always harder than we think it is. And so I'm actually, on the 3-year, I'm not that ambitious. I think a reasonable goal for this whole ecosystem over the next 3 years is have a big Bitcoin exchange actually use Lightning for clearing. I think that's enough. But once we start looking at 5 or 10 year windows, I'm a lot more ambitious. In 5 or 10 years, I'm looking forward to at least a few Latin American or African countries just stopping pretending that they should have a central bank at all.
I agree with you on the 3-year. I don't think we're going to really see dramatic changes in the ecosystem. But I think at 10 years, the answer to that question, I think, probably comes outside of the United States. I really do think that you have to look at the market in countries, again, and this is just my company talking in my head, but I do believe it's true that that the real solutions that we're going to see really take off and come to life are in countries where there are a lot of services that are corrupt or manipulated or sort of unavailable, that we see blockchain coming in and offering new solutions for. Again, we're not going to cure cancer, we're not going to send a man or a woman to the moon, but we are going to be able to make some of these services that are really slow, overly manipulated or inefficient, become much quicker, much faster, much more secure, much more trusted. And again, it's been one of the most interesting sort of experiences for me in this space, in my limited time here in this space, which is to realize that there are so many of these problems outside of the United States where solutions like this are so applicable. Land titling, healthcare, education, corruption in education systems around the world. Diplomas, medical certificates, credentials, all being falsified, fraudulent. identity, passports, all of the sort of things that in the United States we take for granted are areas where around the rest of the world people are crying out for help. And so for me, that's the interesting space, and that's probably where 10 years from now I think we'll be focused. I'll be focused.
And Joe, I don't know, a little different answer since you're the financial guy. You want to talk about any numbers?
Oh, any numbers?
Oh, no, say whatever you want to say.
I know there's many like hedge fund managers you can read about who predict, or even Tim Draper predicted like 250K for Bitcoin by 2022, which seems like a lot to me. But many of other hedge fund managers that you could read about say 20,000 for Bitcoin. But it's really not about that. It's really about what's the fundamental value here that we're building, and is Bitcoin or other crypto assets going to be picked up? The trends I was actually going to talk about was opposite. It was going to be about tech companies like IBM investing so much in the blockchain and not necessarily in tokens and crypto assets. Although we do see on the payment side, obviously Ripple is working with 60 some odd banks, some large number of banks, but we see Santander Bank and Royal Bank of Scotland and other banks putting tens of millions of dollars into their development of the blockchain to that industry. And then I would just echo what you guys said about other industries being really excited. It's exciting, doing really exciting developments from real estate to insurance to utilities on the blockchain and more. So there's carbon credits, a lot of really exciting applications that we're seeing.
Thanks so much. That was really fascinating. Thank you.
Thank you, guys.
Thanks for listening to episode 54 of The Bitcoin Game. You'll find show notes and links at thebitcoingame.com, and you can also leave a comment on the episode. In fact, I'll give away a Bitcoin Keychain to someone who leaves a comment there. See you next time.